Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, January the 30th. The year's 2023. Let's talk trading. Know what you are trading. These videos are for educational purposes only. Your results may differ from mine. Know what you are trading. That covers a lot of ground. You need to know what market you're trading. Are you doing equities? Are you doing the indexes? Are you doing ETFs? Are you doing commodities? Are you doing metals, crypto? Are you doing foreign exchange? That's number one. That's, what you're trading. Pick one. And then within that, what instrument are you trading? Is it one particular stock, one particular pair? Especially when you're starting out, it's best to cut down on the variables rather than try to find what I would used to call the stock du jour, or stock of the day, because then you're out there, you're trying to be a stock picker, pick the hot stocks, as opposed to being a stock trader. There's a slight difference. Actually, it's probably more than slight. And know what you're trading in sense of your money. How much money are you willing to trade? How much are you willing to lose? Something that I like to say, what's your shake point? In other words, if the amount's so big that when you go to click the mouse, your hand's shaking. You need to know these things. And the method. You need to know the method. You need to know, your expectations. You need to know where to enter and when to enter. You need to know where to exit, when to exit, whether it's in profit or in loss. You need to know what you're trading in terms of when it's time to quit. There might be certain times a day that are better than others. There might be certain limits that you've put on yourself in terms of stop losses or profits, where, okay, you've made your daily goal. Why are you pushing it? Because what could happen very easily, you could wind up giving back all that you made and then some, turning a winning day into a losing day. You really don't want to do that, because then you get into the emotions. And know what you're trading on your platform. Know your platform. Know the ins and outs of it. So you just really need to know what you're trading. So as we take a look at the charts here, let's just see. Okay, where do we start? We start here on the monthly chart. We can see we're up for the month. Nice green. Almost broke out. Not quite. I don't believe it broke out. We've got a high of 4.6. Actually, I think it did break out slightly. We got 24,461, 24,47. So yeah, it did break out. So technically, we've got an outside bar this month. On the week, you can see here we're 10 pips below the open. And if you didn't see last night, all the weekly open gaps have filled. We're still putting in that range for the day. Right now, we're just 7 pips off the bottom. You can see only about 51 pips of range. And we're way above the year-month open and the year-month high. And the Friday bar was an inside bar. It looks like we only broke out of it by about, let's see, we've got 18.3 high. No, we didn't break out. So we're still within that inside bar. Lots of inside bar action showing on the dashboard here. So let's just say you're trading these inside bars. Well, the question is, what does your method say? Does it say that the price has to hit this? Is it the bid that hits it, or is it the ask? That's something to consider. Then where do you get out? Well, you see this upper wick zone. So if it's going out of this side, but then it comes back in and starts to come out of this side, there's a good place to put your stop right there. So once again, know the method you're trading, know the parameters, know what the price action is. Once again, 51 pip range, not much of a range. And usually the pound moves up. So if anything, if the range is going to go, it's probably going to go to the downside. Even though I think in the past hour, it did have a nice little run up. Right there, and then a few hours ago it had a run. But you can see here we're right in the short zone. So what's this method say? Short zone. Well, now's a place to enter. But the question is, based on the price action, do you want to take this entry? Now, this is where you really have to know your trading. You could just go ahead and take that entry. It doesn't matter what happens in the past, because what happens now is what matters. So you could say, you know what, I'm just going to take this entry, because based on the frequency distribution statistics, I know chances are price is going to move. And so right now, it's already dropped to a point where you'd probably be at break even. Let's see, let's just put the so yeah, you'd be right there, a couple of points up. But the point is, you have to know the method. And where does it tell you to stop? Well, if it closes above here, or if it gets here, which is telling you to buy, that's where you'd want to stop. So depending on how heavy you want to trade, you might exit. And actually, you can see here, if this were to come back up and start to head into this wick zone of the previous hour, you might even want to cut your loss right there. Or even better yet, right here, if it comes across this open line, this lowest open, actually the lowest open is right here. But this was these opens, if price were to come back above that, you might want to consider exiting. On the other hand, let's say if you were doing a holo trade, well, there's the lowest open right there on the H1. If you would have taken that trade coming back the other way, you would have had a couple of pips. But you have to know the method you're trading and trade that method. Trade what you see. And you take the trade, and if it gives you a chance to take some pips, you take the pips. What really hurts is maybe you're up 2 pips and you don't take them, and then all of a sudden you're down a pip. Then you want it back, and then you're down 3 pips, then you're down 5. And we've probably talked about this before. Then maybe you even stop out, or maybe you add to it and make it worse, and it keeps going against you, and then you finally get out of that trade. Then the next time it happens, you get in a trade, you take 2 pips, and then it runs up for another 5, 10, 15, 20 pips, and then you kick yourself again. See, this is why you have to know what you're trading. You have to know the method, and you have to know when to exit. So if you're in 2 pip mode, you take your 2 pips. So for example, let's say you have a 10 pip goal. You want to make 10 pips a day. And you get in a trade and you're up 2 pips. Well, hey, you're 20% of the way there. Maybe price stalls, maybe it doesn't. But you take your pips off the table. Doesn't matter what happens next. Price could go down, price could go up. And it might even give you another entry. And that's what you have to realize. There will be another entry. There will be another opportunity. So take some pips while you can, and then wait for another entry. So right now, you could have one trader trading the buy zone, and you could have another trader trading the holo zone, and one's going long and one's going short, and they're both making money. But that's probably because they know what they're trading their method, they're not necessarily looking for the big move, and they're happy to take some pips off the table. So as you can see right here, if you had taken that short at 72.1, you'd have a little over a pip. There you have a pip. So, that's just showing two methods. Either one could have been profitable, but it was only maybe good for a pip or two. But once again, if you have a small daily goal of 10 pips, 5 pips, whatever it is, you might not get there in one step. And that's just something to consider. So right here on this holo trade, that was worth a couple of pips again. Now, I don't know what, maybe you're on the 5-minute chart or 10-minute chart looking at price, what's price doing. Doesn't really matter because price is the same, but you might be using the candle colors as a reference to say, okay, well, I'm going to wait for green at the line. So for example, if we were to go down to the 5-minute time frame here, and I'm not sure why my computer is spooling like this, taking forever. To change. I think I have an issue with my internet connection because I'm out in the country. So, now it looks like it wants to change. So here we go. So where was that lowest open? Was somewhere around here, right around 70, I believe. So in these cases, if you're at M5, you would have been trading with wicks as opposed to with the candle body. And then also, we're also in the rat zone. So right here, you might be looking for a rat reversal. Red candle closes, green candle closes. Go long at the high of the previous green candle. And which would have been at 72.8. So if you took that trade, you might be down a bit. So once again, you have to know you're in the rat zone. You're looking for a reversal. In this case, this was M5. And if you're taking that trade right now, you just be waiting to see what happens. So, fellow traders, know what you are trading. And even though you know what you're trading, it's not only what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.